Hello friends, there are two reasons why I am making this video. I was recently driving through Europe to visit my daughter in Rotterdam, and during this drive I listened to an audiobook of The Shoe Dog, which is an autobiography of Phil Knight, the founder of Nike. And it is a great book. It is so well written. I really encourage you to read it. So I thought that it is time to make another video about Nike. And just a few days later, a number of you asked me for this video because right now Nike is down 57% from its peak in 2021. And just recently, they published their financial results and the stock fell 20% in one day. So let's see what is happening, and let's start with those results that caused such a drop. Revenue, if we look at the last 12 months, did not change. Net income is up during that time by 12%, cash is up by 33%, and debt is down by 11%. So those results are not that bad. Lack of revenue growth is worrying, but not critical. But the fact that they missed analyst expectations pushed the price down. And also, if we look at revenue quarter to quarter, we see that it went down by 2%. But does it justify a 20% drop in one day? Well, it's true that they made some mistakes along the way. They cut their ties with a number of merchants because they wanted to concentrate on direct-to-consumer sales and online channels, and that did not work as planned. So right now they are left with the biggest amount of inventory in the history of the company. To get rid of it, they have to sell it at a discount, and so the revenue is going down. And the next few quarters are probably not going to be pretty. But is it really that bad? Is this company really falling apart? Or maybe the market is overreacting and we can get a chance to buy a great company at a fair price. If you were to invest $1,000 into this company 10 years ago, you could buy around 26 shares, and now they would be worth something close to $1,956. And this company also pays dividends, so in that time you would get $238 as dividends. So if we add together the current value of shares and the dividends, we get $2,194. And that is a gain of 119% in 10 years. Considering that in the last 2.5 years it lost almost 60%, that is a nice result. Individual insiders, that is a check. 20.7% of the company is owned by individual insiders, and Phil Knight owns 17.5% of it. So the management definitely has its skin in the game, and that is great to see, because then they are incentivized to take good care of the shareholders, because they are the shareholders. And are individual insiders buying? That is an X. We don't see any transactions from insiders recently. And do super investors own this company? That is a check. There are 9 super investors that put their money into Nike, including people like Terry Smith or Thomas Geithner. And are super investors buying right now? That is a check. In the last quarter, they bought 3.6 million shares and sold only 800,000 shares. Return on invested capital, that is a check at 24% 10-year median returns, and we want to see this number higher than 10%, so such result is really good. And what do we know about net profit margin? It is a check. It averages 10.6% over the past 5 years. And the sector median is 4.7%. So Nike has a lot of pricing power over its competitors. And now let's take a look at share buyback. It is a check. They bought back 13.6% of their shares in the last 10 years. That is good news for long-term investors, because if there are fewer shares, each one represents a larger part of the company. And the debt, it is a check. It would take only 1.3 years to pay the long-term debt with a current free cash flow. I like that a lot. Nike is a very solid company when it comes to financial health. Revenue growth, that is an X at 6.3% 10-year compound annual growth rate. And we like to see this number above 10%. So such growth is disappointing. But recent results show that it can slow down even further. Free cash flow growth, that is also an X at 6%. And when we look at the earnings per share growth, we see that it is an X at 9.6%. So almost 10% that we are looking for, but not quite there. Well, growth is not very impressive. But since Nike holds over 38.5% of the global market share, we can't really expect it to grow much faster. The dividend yield is 2%, so shareholders can expect to get $1.48 annually per every share. And the payout ratio, that is a check at 36.6%. And we want to see it between 20 and 50%, so that is a nice result. We get around 1/3 of the earnings as dividends, and the rest goes back into the business. And what about the dividend growth? It is a check at 11% 5-year growth rate, so a very impressive growth. Price to earnings ratio is 20.2, a bit below the average of the S&P 500, so maybe it is somewhere close to its fair value. But to find out if this is the case, we will use a discounted cash flow formula to value Nike. So first, we will create 3 scenarios of its future growth. In the low scenario, we will estimate a growth of 6% for the first 5 years and then 5%. In the medium, 8% and then 7%. And in the high scenario, 11% and then 9% growth. So the low scenario is somewhere near to the growth we saw from Nike in the last decade. Medium is close to the expected growth of the industry, which is 8.2%, and the high one is showing a story in which Nike is going to outperform its peers. But taking into consideration its size and market share, it may be a bit optimistic. So, with such estimates, the intrinsic value in the low scenario is $68, in the medium $78, and in the high scenario $94. But we have to also apply a margin of safety to those prices. I use a 30% one, and with such a margin we get in the low scenario $47, in the medium $54, and in the high one $66. And the current price is around $75. I would not say that Nike is fairly priced at the moment, but it is not that far off. Okay, so let's try to take a bird's eye view of this company to understand its strong and weak points. So if we go to our Stock Ranking Pro, here we have all the data about all the companies we analyzed on this channel. And when we go right, we get to our scores. And we can see that Nike has an overall score of 2.2. So let's sort the ranking by this score. And as you can see, Nike is the 6th best company that we have in our ranking when it comes to the overall score. Unfortunately, when we add the valuation to the equation, the score goes down to 1.9. That is because even after this great price drop, Nike is still slightly overvalued. But if we have a great company, we can't really expect it to be very cheap. So why is the overall score of Nike so high? Well, let's open the overview, and straight away we can see that there are two main reasons for that. It is definitely not the growth, and also financial health is good, but not exceptional. The first reason is investors. Both insiders and super investors own a lot of shares of Nike, and super investors are also buying it recently. And the second reason is a very strong dividend. So when we find dividend data in the ranking, we see that the yield is okay, but it is the payout ratio that is very nice, and of course a massive growth of the dividend. If we click here and open all the informations about this company, we can find the graph showing the history of dividends. And it is an impressive growth, especially in the last 11 years. So tell me in the comments, do you think this price drop is only temporary, or is Nike really in some serious trouble? If you enjoyed this video, then check out my analysis of Lululemon, a fast-growing competitor of Nike. Thank you so much for watching, and see you in the next one.